Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PVH Corp annual report. PVH Corp, a leading apparel company, offers a diverse range of products and services through various segments. The company's portfolio includes men's, women's, and children's branded apparel, footwear, and accessories under its own brands such as Tommy Hilfiger, Calvin Klein, and Heritage brands. The company operates in several key areas, including branded apparel, offering a wide range of products such as dresses, suits, swimwear, activewear, sportswear, socks, outerwear, golf products, watches, jewelry, eyeglasses, and sunglasses. Underwear and intimate apparel, providing Calvin Klein underwear, intimate apparel, and other related products. Home furnishings and luggage, offering a range of home furnishings and luggage products. Digital commerce, distributing its products through digital commerce sites. In addition to these areas, PVH Corp also offers various services including wholesale distribution, supplying products to department, chain, and specialty stores, as well as warehouse clubs, mass market, and off-price retailers. Retail operations, operating full-price outlet stores and concession locations. Licensing and private label brands, offering licensed and private label brands through its owned and operated businesses. Overall, PVH Corp is a comprehensive apparel company that provides a wide range of products and services to consumers worldwide. PVH Corp maintains a market capitalization of $4 billion, broadly in line with the industry peer group. PVH Corp trades at a higher price-to-earnings ratio of 155 times and a lower price-to-book ratio of 0.77 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 59% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has aggressively reduced its share count by more than 5%, indicating a strong shareholder-focused capital allocation approach. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for PVH Corp can be attributed to several key factors. In terms of growth, the EMEA region saw a significant increase of $1.534 billion, 36%, while APAC experienced a substantial rise of $1.0737 billion, 71%. Licensing also contributed to growth with an impressive 100% increase of $421.2 million. On the other hand, revenue declined in the Americas by $184.1 million, 6%. The segment information highlights that Calvin Klein and PVH Americas were among the top-performing segments, generating $2.5 billion and $2.4 billion in revenue, respectively. However, Tommy Hilfiger's revenue of $1.8 billion was lower than expected. The company's valuation of goodwill and indefinite-lived intangibles is also a critical matter, with total assets totaling $4.8 billion. Management performed impairment tests to ensure that these assets were accurately valued. Additionally, the allowance for credit losses and operation chargebacks and customer markdowns increased by $1.3 million and $8.7 million, respectively. Overall, PVH Corp's revenue growth can be attributed to its strong performance in EMEA and APAC regions, as well as its licensing segment. However, a decline in the Americas region highlights areas for improvement. The financial performance of PVH Corp in the year ended February 1, 2026, showed a significant increase in revenue, reaching $9.4 billion. This growth was accompanied by an improvement in net income, which rose to $844 million from previous years. The company's earnings per share, EPS, also increased to $12.15. The profit margins of PVH Corp saw a notable change due to the rise in revenue and net income. As the company expanded its operations and improved its sales, it was able to increase its profitability. However, the critical audit matter related to the valuation of goodwill and indefinite-lived intangible assets highlighted some concerns about the accuracy of these valuations. The segment information provided in the report showed that different segments performed differently. For instance, Calvin Klein and Tommy Hilfiger reported strong sales, while PVH Americas experienced a decline. The company's valuation allowance for deferred tax assets was $60.7 million at February 1, 2026, indicating some uncertainty about future tax liabilities. Overall, the financial performance of PVH Corp in the year ended February 1, 2026, was marked by increased revenue and net income, as well as improved profit margins. However, the critical audit matter related to goodwill and intangible asset valuation raised concerns about the accuracy of these valuations. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 3 years. In 2025, the company generated $680.4 million in net cash provided by operating activities, demonstrating its ability to produce cash from its core operations. A closer look at the data reveals that the company has maintained a strong trend of generating positive operating cash flow. The figures for 2024 and 2023 show that the company was able to generate $740.9 million and $969.4 million in net cash provided by operating activities, respectively. This indicates a consistent ability to produce cash from its core operations. The data suggests that the company is generating sufficient cash from its day-to-day business activities to meet its financial obligations and invest in growth initiatives. The positive trend of operating cash flow over the past 3 years is a testament to the company's strong operational performance and its ability to manage its finances effectively. The company's debt level has experienced a significant increase in recent years. In 2025, the debt level stood at $1,579.9 million, but by 2026 it had risen to $2,291.4 million. This substantial growth is largely attributed to senior unsecured term loans and notes that are set to mature in 2027. In terms of interest expenses, there has been a mixed trend over the past few years. After decreasing from $88 million in 2023 to $67 million in 2024, it increased to $79 million in 2025. However, despite this increase, interest expenses are expected to remain relatively stable in 2026, with projections indicating they will be approximately flat compared to 2025 levels. Overall, the company's debt level has seen a notable rise, while its interest expenses have experienced fluctuations but are anticipated to stabilize in the near future. The performance of various segments and regions within PVH Corporation can be summarized as follows. In terms of geographic regions, Europe appears to have complex and possibly costly labor arrangements due to works councils in several countries and significant percentage of associates covered by governmental labor arrangements. In contrast, the Asia-Pacific region, APAC, does not provide specific information on its performance. The Americas also lack detailed data on their performance. Internationally, operations in over 40 countries exhibit varying levels of inclusion and diversity efforts. Looking at specific brands, Calvin Klein demonstrated strong performance with $2.5 billion revenue and $434 million net income. Tommy Hilfiger showed moderate performance with $1.8 billion revenue and $294 million net income. PVH Americas also performed well with $2.4 billion revenue and $344 million net income. PVH Europe and Asia, however, had more modest results with $1.3 billion revenue and $194 million net income in Europe, and $1.5 billion revenue and $244 million net income in Asia. These figures indicate that while some segments performed well, others struggled to match the success of their counterparts. Management is optimistic about the company's outlook, as evident from the financial highlights. The revenue of $9.4 billion and net income of $844 million indicate a strong performance. Additionally, the return on equity (ROE) of 24.1% suggests that the company is generating significant profits from its investments. Management strategy appears to be focused on region-focused reporting, with the introduction of new segments such as EMEA, Americas, APAC, and licensing. This change may indicate a shift towards more targeted marketing and sales efforts in specific regions. Overall, management seems confident about the company's prospects, despite acknowledging several risk factors that could impact future performance. The company has made several acquisitions and divestitures over the years. In terms of acquisitions, the company has purchased treasury shares through various methods, including open market transactions and accelerated share repurchase (ASR) agreements. Specifically, it acquired approximately 0.8 million shares in 2025, 4.7 million shares in 2024, and 5.7 million shares in 2023 through open market transactions. Additionally, the company purchased around 6.9 million shares through ASR agreements in 2025. The company has also made strategic acquisitions of licensed businesses, including the takeback of Calvin Klein and Tommy Hilfiger brands from GII in the United States and Canada. On the other hand, the company has divested several assets to focus on its core business. These include the sale of Warner's, Olga, and True & Co. Women's Intimates businesses to Basic Resources for $156 million. The company also partially licensed Calvin Klein and Tommy Hilfiger businesses in the U.S. and Canada to GII, extending their licensing agreements. Furthermore, the company has sold several non-core assets, including a warehouse and distribution center for a $10 million gain, and closed the Heritage Brands Intimates transaction for a $15 million gain. Additionally, it accelerated the realization of an earnout with Basic Resources, resulting in a $10 million incremental gain. The company also sold approximately 8% economic interest in Karl Lagerfeld Holding BV to a subsidiary of GII for $20 million in May 2022. Overall, these acquisitions and divestitures demonstrate the company's efforts to optimize its portfolio and focus on its core business. The company has a history of paying dividends to its shareholders. According to the financial reports, cash dividends were paid on common stock for the years 2023, 2024, and 2025, with projected payments for 2026. The amount of dividends paid varied from year to year, ranging from $7 million to $9 million. In addition to paying dividends, the company has also been actively buying back shares through its stock repurchase program. In 2023, 2024, and 2025, a total of 16.7 million shares were purchased under this program, with an average price per share of $78.30. The company has authorized a $5 billion stock repurchase program that will run until July 30, 2028. There are concerns about inventory buildup and supply chain disruption in PVH Corp's operations. The company's revenue recognition policy indicates that it recognizes revenue when earned, typically at the time of sale or delivery. However, this may lead to inventory buildup if sales do not match production levels. The segment information reveals that Calvin Klein and Tommy Hilfiger are the largest contributors to PVH Corp's revenue, with 63% combined share. This concentration in a few segments may make it challenging for the company to manage supply chain disruptions or changes in consumer demand. Furthermore, the operating expenses of $2.3 billion indicate that PVH Corp has significant costs associated with its operations. If inventory levels become too high due to mismatched sales and production, these costs could increase, potentially affecting profitability. The segment reporting change to a region-focused approach may also impact supply chain management, as it requires the company to adapt to new regional market dynamics and potential disruptions. That concludes the financial summary for PVH Corp. Feel free to comment below, and I will be happy to answer them when possible.